Good morning, everybody. This is Patrick MontesDeOca with the live trading room for the Equity Management Academy for April the 9th, 2015. The segment is sponsored by the Equity Management Academy. On this segment, what I would like to do is review the weekly gold and silver swing trading instructions that were posted last Saturday. And our subscribers basically received the report on Saturday, and they can go to the members area and click on login, and you would have received this information with enough time for you to basically strategize for the following week. And what I'm going to do is take a look at what the algorithms were indicating for this week and analyze basically what has transpired so that we can see where we are. If you take a look on the chart on the left here, this is the June futures contract in gold that we're following. And on April the 3rd, basically the market, the June gold contract, futures contract closed at 1208. And that was pretty much on Thursday before the holiday. It closed at in that 1208. And it kicked in a bullish signal because the market, the moving average is 1199, and closing above the moving average, the weekly trend momentum is bullish. But it also told you that if it come down below 1199, which is the moving average, the 9-day moving average that we use, the uptrend would be negated. The bullish short-term uptrend would be negated to neutral. And so if we take a look at the pivot point for the week, it's 1199 as well. And with the market closing on Thursday above the VC weekly price momentum indicator of 1199, it confirmed that the price momentum was bullish coming into this week. But it also told you if it closed below the weekly 1199 that it would negate this bullish signal to neutral. And if we do come down below 1199, obviously it's telling you that to look to take some profits on short into corrections at the buy 1 and buy 2 levels of 1190 to 1171. It also told you that if you came in long, 1218 to 1227 were targets for you to take profits. And so let's take a look at what happened on the 2nd of on Thursday, the 2nd of April. The signal was indicating that for the long position, look to take some profits on longs as we reach the sell 1 and sell 2 levels of 1218 to 1227. And on Monday, the 6th, the high was 1224.50, triggering the sell 1 level. And basically, we text our subscribers to take profits, to liquidate their positions as the sell 1 level has been activated, take partial profits on those positions. And on Tuesday, the market was down. It was sharply down on Tuesday, making a low of 1207.50. Wednesday, we had another down day, and today we are coming down basically below the coat. The low yesterday, coming down into that 1199, activated a setup. If it closed above 1199, the signal was long. But if it goes below 1199, that is a stop for your longs, and obviously that's what happened here overnight. We did get stopped out of our swing positions in gold and silver this morning. But it's telling us that if gold comes down to 1190 to 1171, this is the highest probability recommending to buy the market long for swing traders. So we are neutral, and let's see how the market reacts into this buy one and buy two levels, as so far the shift in the pattern by crossing the pivot point of the week or the metrics of the week is indicating the possibility that gold and silver may test the buy one and buy two levels. If we close above 1199, okay, it would negate this pattern that we're in right now, and it would activate once again the sell one and sell two levels. So the market price closing today would be an indication of what we're going to do for the next few days. A close above 1199 activates the sell one, sell two levels of 1218 to 1227. A close below 1199 today activates the buy one at 1190 and buy two level at 1171 for the next couple of days. So let's see how it does over the next couple of days. And on Saturday, we will be writing a new report for the following week, and you will be able to have a pretty good idea at that point what we can expect next week. Let's take a look at silver and see basically what has transpired since we published the report on Friday. The May silver futures contract closed at 1675 on the 2nd of April, last Thursday, with the market closing above the 9-day moving average of 1656, is confirmation that the weekly trend momentum was bullish. But it also told you a close below 1656 would negate this weekly bullish short-term trend to neutral. With the market closing below the VC weekly metrics pivot point for the week that we use as the weekly price momentum indicator of 1675, it confirms that the price momentum was bearish. It closed very, very close to the pivot point of 1675.30, but it did close below, therefore the momentum got bearish at that point. It also tells you that a close above 1675 would negate this bearishness, the signal to neutral. And if you go short, look to take some profits at the buy one level of 1643 to 1610. Let's take a look at what happened here on the second. The market made a high basically of on the 6th, it made a high of 1731, and the algorithm told you to sell 1 and 2 levels of 1738 to 1780. So we came pretty close to those highs actually that were made the previous week of 1738, that the first time around. This time around, the market did not give you enough confirmation, but close enough that as we make a policy in terms of stops when in these kinds of situations, or whether you do day trading or swing trading, when you build a profit, move your stop right away accordingly, at least to a break-even point, so that a worst-case scenario, if the market comes down below your entry point, you break even. And use your judgment, obviously, in terms of how close you trail your stop. We usually recommend using yesterday's low if you want to use a trailing stop on a swing trade position. But being that we are not brokers, and you pretty much manage your account, it is up to you, obviously, to make that decision at your discretion. We can only suggest that you use certain criteria that we use. From the high that we made basically of 1731 on the 6th, that you obviously have seen the market come down rather rapidly into this level of support that was identified on the weekly VC indicator of 1643 to 1610. The low today was 1610.50, and the buy 2 level there at that point basically was pretty close enough that it activated a signal, a new setup there at the B2 level. On the swing trade, if you do buy it, use the 1610 as your stop. Close below, it will stop you out. And if you go long, your first target would be 1675. And the sell 1 and sell 2 levels of 1738 to 1780. The signal has created a new setup, and the close tomorrow on this trade would basically activate a signal above 1610. It would activate a signal with the targets basically right away of 1643 to 1658. And I think, let me just adjust here for a minute, that we're looking at the pivot point for the week to be 1675. 1675 is the pivot for the week. And so what we would like to see, obviously, is the market move up above 1675 for the week in order to activate the sell 1 and sell 2 targets above. If you're buying into that B2 level, then you can use the 1610 as your stop with a first target of 1643 to 1675. A close above 1675 would activate the uptrend once again with a target of 1738 to 1780. So the close this week is pretty significant in my opinion in terms of identifying the trend for next week. What I would like to do here for a minute is take a look at the bigger picture in analyzing the gold market, and use basically let's take a look at the Fibonacci retracements from the high that was made in January 21st, approximately to the recent lows that we made in March the 17th, that are basically the bottom of the measurement metrics that we're using as a major level of support. You can see here that the market has rallied through the Fibonacci fan line trading trend line resistance levels all the way up to the sell 1 target of 12.18. We came up again on the 6th to test that line, and obviously we did not close it, giving us a bit of a bearish indication that the low end of this support fan trend line might be tested, which pretty much coincides with 1190 in the gold. And the low so far today is 1190.240. So we're beginning to get indications that the market is well supported from 1190 to 1171 and all the way down to maybe 1160 at the if we take a look at the downside targets. The close below 1160 would actually activate and challenge testing the lows of March 17 of 1141. But let the market tell us, based on dealing with this day to day, week to week, and using these algorithms as a timing tool for us to validate extreme levels of resistance and extreme levels of support. These algorithms are the subset of support and resistance levels on a daily, weekly basis, but the algorithm identifies the entry points or the trigger points precisely in terms of what price to buy and where. And so if we add the Fibonacci retracement using the same criteria of the high and low, then we see that the market pretty much traded through the 38%, 38.2% retracement level. We got up to very close to a 50% Fibonacci retracement, which is about 1227. And obviously it validated the resistance levels up here, and some profit taken came in, or supply, and obviously we're dealing with that short-term trend that has developed in, and seeing where the turning point might very well be. If you look at this previous pattern here of a 3-day down before the turn up, it could be that we might be developing the same pattern. But once again, we want to let the price and the market dictate what it's telling us, and confirming, validating what it's telling us. And so we're coming into a buy 1 area of gold at 1190, the buy 2 level of 1171. Buying between this area is the highest probability for a long trade, the lowest risk. It is the highest risk for a short trade. The highest probability for a short trade is in the red zones of sell 1 and sell 2. So once again, let's let the market decide based on price action what it does in terms of activating our trigger points using this incredible trading tool called the VC Price Momentum Indicator. Once again, this is Patrick MontesDeOca. If you have any questions at all regarding the application of this algorithm in other markets which we do trade, please feel free to give me a call under no obligation at 805 area code 418-1744, or you can email me at support@ema2trade.com. That's support@ema with the digit number 2 trade.com. Thank you once again for the opportunity to spend this time with you and show you basically our market intelligence that we apply in order to obtain the performance that you see posted on our website. We do it live here in the trading room, and we trade also for those that are interested in other instruments, at the same time that we use the futures markets to give us an indication of a directional trend, we do use the application of ETFs and gold mining shares, which are right now at an incredible value. For more information, you know where to reach me. In the meantime, thank you once again, and until next time, good trading and take care.